What is going on with Tesla stock? Why is it down again? This is like the worst week that Tesla stock has had. Just today alone, it's down a little over 6%. And when we look from last Friday, very close to today, Friday, very close, it's down almost 16%. This is the worst performing week for Tesla stock in about the last 2 years since 2020. It's definitely driven by a macro. Like if you look at S&P 500, it's down almost 3%. But what is going on with macro? Let me break that down right now. This is US unemployment rate. As you can see right here in August, it was 3.5%, and then Fed kept increasing rates, and in September, it increased 3.7%. And generally, governments do not want high unemployment rates. They want them to be lower. And then for October, numbers just came out today, and the actual unemployment number was 3.5% instead of 3.7% expected, which is what we had in the September month. Now, normally, then unemployment is reduced, that's good for the economy. However, it's not as simple as that because we have the Fed. The Fed has been quite aggressive this year, increasing interest rates. As you can see, the interest rates came from almost 0% to now a little bit over 3% versus the United States Fed funds rate. And this is not so good for stocks. What the Fed is trying to do right now is to reduce inflation, and they are willing to sacrifice unemployment. They are willing to increase unemployment to stabilize the economy by reducing inflation rates. But what is happening? Even with the rates going up, unemployment somehow got reduced from September to October by 0.2%. And now what investors are afraid of is that the Fed is going to look at what they are doing, and they see those unemployment numbers going down, which they would want those to go up a little bit or at least stay flat. What they are feeling right now probably is, oh, we increased these rates so much already. And we are not seeing unemployment going up. It went down. So that means we are not increasing rates enough. There's more room to increase interest rates because inflation is out of control. We have to manage that. And it's not affecting unemployment. So we will increase rates more and we will increase them faster. Now, why is that bad for stocks? Well, let me give you a direct example for Tesla stock specifically. So, something about a year or 2 years ago when we were looking at one of Tesla vehicles, eventually we got the Model 3 all-wheel drive long range. We got a financing offer to buy that Tesla for less than 3% interest rate. It was insane. Less than 3% interest rate. That's less than inflation. Just think about that. Less than inflation. Super cheap financing. Now, if I wanted to get that same car, the interest rate would no longer be under 3%. For many people, it would be a lot higher. So if before, let's say you got a car, and let's just use super simple numbers. Let's say your car payment was $1,000 per month. And now with increasing rates, all of a sudden, if you want to buy a new car, that same car that you could have had for $1,000 a month, now you had to pay $1,100 or $1,200 or $1,300 or $1,400. And if it keeps going up, the interest rates, now it's $1,500, $1,600. And if it goes really crazy, maybe even $2,000 per month, that would be a complete insanity if the rates go up that much. But if that same car now, instead of costing $1,000 a month when you finance it, and now it's going to cost $1,400 a month, what is that going to do to demand? The demand is going to go down. And what is that going to do to the bottom line of automakers? Generally, the bottom line would look worse. Profits would go down, revenues would go down, companies would have to fire workers, everything would go down. So that's usually the effect of interest rates. Now, with Tesla, the effect is nowhere near as bad as with any other company because Tesla does not really have any debt. Tesla does not need to raise debt. The demand is very strong. So even if consumers need to pay more to finance their purchases, Tesla will still be fine. But still, there would be some effect if interest rates are increased really very aggressively. But Tesla is in a good position. Many other companies are in not so good positions. So that's why macro today was affected so much. And that's why the stock market is down generally today. However, that's not really the only reason why Tesla stock is down so much this week. Also, there is Twitter. Elon Musk going back and forth with Twitter. That also creates a lot of uncertainty. Elon has a deal to buy Twitter at $54.20. And Twitter stock went up as high as $52 on Tuesday. But now, every single day it's going down a little bit because of the confidence about the deal happening. The market thinks maybe it's not happening. Maybe Elon will back out of a deal again. It's not really a done deal yet. And that is not good for Tesla stock investors at the moment because maybe Tesla stock investors are thinking Elon will have to sell Tesla stock again to finance the remaining few billion to make that deal happen. And of course, it's a big distraction at the same time. Even though Elon can manage many things at the same time, he's not putting that effort and attention into Tesla that before he could do. And then lastly, third big reason why the stock is down so much this week, especially on Monday, was because Tesla missed delivery estimates. Not so much production though, but delivery. And now there are a lot of bears that believe that Tesla has a demand issues. For example, Chicken Genius Singapore, he believes that Tesla has a big demand issue. In my mind, I made a video, 11 reasons why Tesla stock has no demand problem. I really don't think Tesla has any issues with that. So this to me only presents a buying opportunity because the market is assuming there is a problem, then there is no actual problem. Now, the macro is a whole different thing, and I will make another video later in the next few hours, definitely by the next end of day, how lower will Tesla stock go down. So watch out for that video. There is a good chance, it could go down substantially lower. Either way, I am buying. I'm happy to buy Tesla stock at $300, even $400 per share. So anything below that, it's a steal for me. And every single time I had huge increases in my net worth, when I made my first million and then when I went from my first million to 10 million, there are usually those opportunities that no one else is somehow seeing. It's a rather obvious opportunity if you look into it, but others just simply choose to ignore it. And I believe that is exactly what is going on with Tesla. However, if you are all into Tesla stock like me, I only own Tesla stock in my stock portfolio, be prepared for the stock to go lower. It could, maybe it will not. No one really knows. But there is that chance if macro, if S&P 500 and if the stock market overall goes down, Tesla, of course, will be affected. But earnings are looking good. Earnings, profits are increasing. So eventually, I believe very deeply that it will come back up very strong and it will keep going up for quite a long time after we get through this macro environment. So if Tesla stock going down scares you, you gotta watch this video, 11 reasons why Tesla has no demand problem, because that's really the main driver for the stock going down. That would overcome even macro pressure, I believe, if everyone thought that Tesla has too much demand, which I think it has too much demand. My name is Matt Pocius. Thank you for watching. I'll see you right here.